Oh, we'll explain that in a second. Right, how do you know when a turnaround story still has legs? Consider the case of Wendy's, the world's third largest quick-service burger chain, with a stock that's given you some phenomenal gains over the last 5 years, and we've been behind it. Wendy's has been one of the best performers in the restaurant space, thanks in part to the company's radical transformation, some of it under the watchful eye, by the way, of Nelson Peltz, the all-star activist investor. But Peltz began reducing his stake in the company last year, although he's still got a big one, and while his Triumph Fund remains the largest shareholder, it seems as though the company has already implemented most of its cost-cutting and expansion strategies. So if the turnaround phase may be starting to taper off, what's the next leg of growth? Let's take a closer look with Todd Penegor. He's the CEO of Wendy's company. You get a better sense of how his business is doing and where it might be headed. I think you got a little heads up on the music about where my questioning's going. Mr. Penegor, welcome back to Mad Money.
Jim, good to see you again. How you doing?
Thank you. All right, so we're thinking about next leg, and I'm looking at some of your snarky social media where McDonald's says that the majority of the stores may be using fresh beef. You came right back, and I'm listening to some music that apparently is doing quite well.
Yeah, no, on Friday we dropped a little mixtape. It was all about fresh. Peaked on the weekend on iTunes at #3 on the hip-hop charts, if you can believe it. But it's really about telling our food story, that we're fresh, never frozen. And we called out a few of the competitors along the way. But we want to really make sure that people understand that we are fresh and we're a little bit different.
Right. And social media would indicate that, too. Now, let me ask you something. You have had a phenomenal run. And when I say that, the same-store sales growth, it's been so great for so long. Todd, I wonder, how do you maintain it? Honestly, it's tough.
No, we're proud. We've got 20 straight quarters of same restaurant sales growth.
Right.
And the business just continues to deliver quarter over quarter. And the opportunity is really to leverage a couple of things. Really talk about our fresh messaging, right? Fresh is still so on trend, and it's been for the last 50 years that our brand has been in existence. It's really talking about, the next generation of our designs. How do we make sure we got food forward to showcase all of that? And then how do we connect to that next generation of consumer, right? You heard a little bit of it, with that mixtape, but, we got 2.5 million Twitter followers where we really get to talk about our differences and how we stand apart from the competition.
You ought to explain to people how fresh is what people want, even more than necessarily natural or organic.
No, at the end of the day, it is about fresh, Jim. And, we've been serving fresh, never frozen North American hamburgers on all of our hamburgers since day one in 1969. But still to this day, we're bringing in whole heads of lettuce, right? And spinning and chopping and, chopping our tomatoes. And our menu is all about full customization, made to order. A lot of consumers don't realize that today. So we've been elevating the awareness of fresh beef. We've been elevating the awareness of a full customization by having food forward in our new restaurant design and really leveraging technology to complement it.
You have coined something, and I want to go over the technology in a second. Speed, convenience, and affordability will make quick service always be popular. The speed seems to be at this level technology.
Technology will play a big role, right? Speed, convenience, affordability, basic human needs. And that's why QSR continues to steal more and more of the restaurant space meals. It's the reason why folks still get out of their home to come out to the restaurants. Technology can complement it all. If you think about customer self-order kiosks, you think about mobile order, mobile pay, those are things that can work past the slowest point in the whole process, taking the order. Right? And folks feel like they have a better customer experience. You get more orders to the kitchen, but it complements our operating model, right? We've been doing full customization, made to order from day one. Anyone can take an order faster. The key is, can you actually get that order out the door accurate and fast?
Two things that you highlight that I want people to understand. Balanced high-low calendar and buy and flip. These come up repeatedly in the conference calls. I need you to explain to people what they mean.
Yeah, so balanced high-low is making sure that we have an always-on message on both of our premium or core. So we're talking about fresh beef all the time. We're bringing limited time offers to life on a regular basis. But we also have a value message going full-time. And those are things like, our 4 for $4, which we just expanded. 8 items for $4, 4 items for...
It's a big hit for
It's a big hit, but we also do disruptive things like the dollar double stack, really to drive folks into the restaurant to make sure that once they're there, we can help them trade up across the menu.
And the buy and flip? Interesting.
So buy and flip is really about how do we build a stronger system. So if you think about our system over the last 4 years, about 40% of our restaurants are in the hands of new operators, some existing, some new to the system. And why is that so important? Well, we've got about 30 new franchisees, all new to the system, that we brought in over the last 4 years. We also got 30 new franchisees that are next generation.
You just tell people a franchisee doesn't necessarily have one store.
They don't necessarily have one. On average, they have 17 restaurants in our system. But what is really important is we got franchisees that are focused on our business for the long run. They're thinking about this business in the next 15 or 20-year increments. They're investing in new restaurants. They're investing in reimaging. They're investing in technology. And that's important to really drive the transformation of the Wendy's brand.
Got it. Now, the long-term plan is to have 7,250 stores. Credit Suisse said, hold it, your plan had been to have 7,500. You're slowing down your growth. I just need to get an answer if that's really the case.
No, not really. It's just a slippage of about a year. So we're still going to get to 7,500 restaurants by 2021. So we had a target and a goal for 2020. So in North America, we did slow a little bit. A lot of that was just the timing of the pipeline. We got a strong incentive out there. And we're asking our franchisees to do a lot, invest in reimaging, new builds, and technology. So they have to pace and sequence that out, Jim.
Okay, so Credit Suisse pointed out that there's a lot of competition in the segment, that there's an oversupply and rising labor costs. Are those all playing a role?
They're all playing a role, but what you're seeing is the restaurants with scale are growing, right? Because when you have scale, you can invest in technology. You can invest in things from a consumer-facing technology in the front of the house. You can invest in automation in the back of the house. You can do things with industrial engineers to figure out how do you optimize your labor guide along the way to really mitigate some of those inflationary impacts. Those are important things to help differentiate, because what we know is you can't pass along to the consumer, the wage inflation, because the gap between food at home and food away from home just gets too wide. So you got to find efficiencies to offset those pressures.
Millennials love social media, despite what Facebook actually was up today. And you know what else they like? They like delivery. Whether you like it or not, they like to see. I like it there because when I go to my one in Short Hills, it's so piping hot. It's so great. I don't know who would possibly take out, but they want takeout.
They do want takeout, and when you think about convenience and how does convenience get redefined, a lot of that is how do you bring it to them and where they're at. We've got a great partnership with DoorDash. We've got about 20% of our restaurants now being serviced by delivery. Number one, number two selling items, believe it or not, are French fries and Frosties. So two things that you would say, do they really deliver well?
Travel? No.
But we're still getting 4.5 out of 5 stars, and our highest overall satisfaction, restaurant, dine-in, restaurant, drive-through, or delivered, is delivered. So we get the most credit for a delivery order right now.
Holy cow, that is high. I can tell you from my business, that's highly unusual. That's Todd Penegor. He's the CEO of Wendy's Company. I think they have a lot in the hopper, a lot ahead. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.